And as the church bells rings in my beautiful little Barrio Los Angeles church, it's time to usher in another Market Conversations. Hi, everybody. Jerry Hall broadcasting from Costa Rica. Tonight's show should be really interesting. This theme of macroeconomics and finance colliding with crypto is very real. For a lot of us that have been in this space for the last several years, there's always been this, the capital markets are just on the other side of the fence and they're approaching. Well, folks, they're here, and they're here, and they're here in a big way. And tonight, I am glad to be joined in studio by Real Vision's crypto editor, Mr. Sebastian Moonjava. Make sure you get your comments in, your questions. Let's get right to it. Let me welcome in Sebastian. So, Sebastian, how are you tonight?
I'm doing great. How are you?
Man, if I was any better, I'd be a crypto editor on Real Vision.
There we go.
Right on. So, hey, why don't we take a second as people are piling into the stream? I see the count going up here. People are tuning in. Why don't we take a second, introduce yourself, give us a little background to who Sebastian is, how you found crypto, and how your involvement in the digital asset space led you to working for one I think is the premier financial news media outlets on the planet.
Yeah, so I actually found crypto in 2013. That's when I started really paying attention. I was actually in college at the time. And so I was actually studying economics. So I have my degree in economics. And so I have my crypto education came right at the same time that I was learning traditional economic stuff. And so 2013, I actually, I'm in Idaho in the US. And so I actually found this group called the Idaho Bitcoin Group and had talked with a bunch of guys who were very hardcore Bitcoiners, right? And so that's kind of like how it all started when I first started paying attention. Spent a few years getting to know, getting to learn about Bitcoin and got to learn from a big group of really, interested people in the space. And then from there, I finished up college and I still had an enormous interest in the space. I started following Ethereum stuff, right? And so I actually was like, all right, I really want to be involved more. I want to get hands-on. I want to do something. I want to help encourage. Yeah, I want to help encourage the space to grow. That's really important to me because I came to crypto, really to help change the world. Like as soon as I noticed like how powerful it was and the things that I could do, as soon as that really started hitting me, I was like, wow, I need to be a part of this, right? Like I don't know if people like Andreas or like a lot of the great crypto people, they have these stories about when they're like, I have to do something related to crypto. And so I sort of had that same sort of thought pattern, and I was like, I need to do something. And so I just started reaching out to crypto teams that I thought were the most interesting. And so this was probably 2016. I started reaching out to a bunch of these crypto teams. Honestly, I reached out to like a million different teams, and I just was coming out of college, so I didn't have much, experience. But I did have a strong crypto background, meaning like I had been studying and paying attention for a long time. And so I did end up getting a job as a community manager with this team called Status. And I don't know if you're familiar with Status. They're in the top 100 coins. And I helped them with their project. I was the community manager. I worked with them for like 7 or 8 months. I was involved with the ICO boom, right? Like I was on a team that was a part of that first big cycle. So yeah, I mean, so I've been doing crypto stuff for a long time. After parted ways with them and helped them get going, I basically for the past 3 or 4 years have been researching and studying and playing with crypto full time for like 3 or 4 years. And then I saw that Raul, right? I started paying attention to Real Vision maybe like, let's say 7 months ago.
Okay.
And so I'm actually fairly new to Real Vision, is as an observer, as a community member, right? And I was like, wow, these guys are really smart. They are kind of the cutting edge of traditional finance, right? And so that I was like, that's awesome. They're cool. So I started paying attention to them in the macro scene. And then after, like I said, like 6 or 7 months of them being on my radar and me watching their videos, I saw Raul had posted, a tweet or whatever about, hey, I want a crypto fanatic. And I was like, that's absolutely me. And so honestly, like I've been really enjoying my own time and just researching, and I've actually considered myself sort of like a super glue for a lot of the crypto projects within Ethereum. Like I reach out to one project, and I say, hey, your project could actually really use what these other guys are doing. So I've helped like cross a lot of these really important projects together. And when I heard about this position with Real Vision, I was like, wow, I think this is a great opportunity to help me basically educate the next big group of people onto what's happening here in the space, why it's important, and why people should be paying attention. So to me, I saw it as how I can contribute to the space. I'm not a developer, right? I'm not that deep tech savvy, but I was like, how can I contribute? And this is the way that I saw that I could, is that I've been studying, and I want to share with the community what I've learned and how they should get involved.
No, that is wonderful. I'll tell you, one of the things that I find interesting is the departure, or we'll call it the disconnect between university taught curriculum in the world of economics, the field of economics, and real world economics.
Yes.
It's like they shouldn't have the same name because they're not the same thing.
So yeah, I love that. I love that you bring it up, because I feel like my education from the crypto stuff really, really taught me more. And same thing with like the Real Vision stuff, that these people taught me, I would say, more actual real world economics than when I learned in school. I absolutely do believe that. And with the crypto stuff, it's live action, like if this crypto economic idea doesn't work, it's broken. It breaks, you lose money and it's over. Whereas in the traditional world, or theoretically, you're just kind of going through ideas. Or when we look at the traditional finance world, the system is so big and ingrained into our daily lives that either we completely ignore it, or if it is being hurt, it will exactly. If it is being hurt, it takes a long time for these processes to play out, right? Like because the system as it is so big and so powerful and ingrained that it takes so long for the negative things to shine out, or for people to even recognize that there are negative things going on.
Well, so Mike has this statement, and I want to read it out loud because I think it draws attention to a very poignant topic. He says, it amazes me how the rest of the world has no idea how blockchain and crypto is going to change the world. Mike, I could not agree with you more. And I believe the reason is a vast majority of the population in all developed areas of the world are financially illiterate. They don't understand how their monetary policies work. I just read through, matter of fact, I have it right here. It's from, I believe Genesis Mining. Genesis Mining did this whole report on a survey that they did. And they do this survey every year. Questions as simple as, do you know what supports the value of the US dollar? And it is amazing to me, the percentages, when you see that 8% of the surveyed people will say, I don't have any idea. 40% will say, well, it's backed by gold. You know, some say, well, it's just backed by the government or it's backed by the military. So what has been interesting for me, and you can correct me or, support the premise here, is that it's been through my journey as an investor in the digital asset space starting in February of 2018 that led me to this rabbit hole of learning. And as I was learning about these various projects, your Bitcoins, your Ethereums, your XRPs, the proof of work spinoffs, and these other proof of stake protocols that are coming out, the kind of the top 20 is what I've always kind of focused on. That it is through the learning about these technologies that led me to a deeper learning and understanding of the financial system that the world operates in. And it wasn't until I really got to understand how the financial system works that the real value proposition of what this new system that's being built in parallel can really bring to the table. When I got to crypto, I had witnessed the Cambrian explosion, that parabolic run from literally November of 2017 to the first couple of days of 2018. I saw that, so obviously I was attracted to the gains. Who wouldn't be, as any investor who, of any kind wouldn't be, wait a second, that's monstrous. That's not normal. There's something to look at here. So when I got skin in the game and started learning about this, coupled with starting to really understand how the monetary systems and policies of different nations around the world, as well as the financial network around the world, how it works, and seeing what this new technology is bringing to the table, Ray Charles could see this was a good investment. And it was now just a matter, as an investor, it was, okay, this is a solid investment. The only thing I'm not clear about is the time horizon. I don't have a time profile. When I got in at 2018, I had seen what happened in December of 2017 and had hoped it would repeat itself like with a market cycle.
Yeah.
You know what I mean? Which hasn't happened, and that's totally okay. But every day, as I learn more and understand more, my conviction level grows stronger. And it was through this 2.5 year process that I also found Real Vision through their free YouTube stuff, fell in love immediately. And up until recently, how I consumed Real Vision, is through their YouTube content. I'm now a subscriber and participating on the exchange, loving the crypto channel. So if we could segue from our past and into our present, let's talk about what you want to bring to the table for Real Vision Crypto and what you see unfolding there.
Yeah. So, when I told them, when I was going through the interviews, even when I talked to Raul, at work, is that I'm telling him, like, I want to help encourage and educate, right, the masses. This is a part of why I wanted to join up with the team, is that you have a great platform. You guys are great educators. They are doing this democratizing finance, right? Like we live in this era of, the Robin Hood investor. The average guy can now play the game, right? Where it used to be like, I have to go, 20 years, 30 years ago, it's like, I gave my money to my broker and I let it go and I never looked at it again. Whereas now it's like, wait a minute, people are like, what's going on here? What's happening with monetary policy? Why are equities the way that they are? People are like, everybody's kind of becoming like awakened to what finance is, right? What are investments? What are these things? Because of the internet, right? So with Real Vision, like I said, I wanted to use them as a platform to help educate, right? To help bring these people on and make sure, like, So one, we do have a lot of scams, right, in the space. So this is like, people are very weary of entering because they're, people think everything basically is a scam, and many things are scams. So I had hoped really to try to provide myself, provide tools for people to kind of understand them or gauge them or begin to grasp whether they are maybe will go anywhere. So that's really what I had hoped to do, is to provide some tools. Real Vision, we are working on a lot of stuff related to crypto, and I think that they're really going to be invaluable to anybody looking to get involved in this space, just like they are with finance in general.
No, I agree 100%. One of the incredible things about Real Vision is that you have a built-in community of savvy investors. Now, what they're not savvy to is the crypto space.
Yep.
All right. And that's totally cool. That's great. So for Real Vision to bring on this asset class and actually dedicate, I don't know what the correct term is, a tier, a channel, a silo within the Real Vision family. I don't know how to describe it, but it's literally its own crypto channel within the Real Vision platform.
Yeah.
I think will aid a lot. Now, one of the things I will tell you is incredible about Real Vision is that they've always been fair in their reporting, and very rarely ever take a particular asset and promote it. They promote principles over products, right?
Yeah.
I love that about Real Vision.
Tools.
One of the things, tools, exactly, because the name of the asset over time changes, right? The name of the assets over time changes. But the principles of good, sound, solid investing, they don't really change. And the truth of the matter is even university graduates coming out with economics degrees, I'm just going to use street language, don't know shit about investing.
Yeah, no, absolutely. So and this is like what you've already said about getting, education through the crypto stuff has really opened your eyes more. That's exactly true. So this is a funny thing that I like to tell people is like, I've never owned a stock in my life,
Okay.
like but like I understand those things pretty well because of my own crypto stuff. My crypto education really has, like, I consider myself crypto first, right? Like, I'm a crypto first investor. I'm a crypto first technologist. So those things are really important. And so, like you're saying, a lot of the people that come into the space, they come from this really like closed-minded framework. Whereas the crypto people are the opposite. They're like, oh, I can understand an equity if I understand some of these tokens, or I can understand scarcity or inflation once we say, why is this coin worth nothing and why this is worth a lot? So I think that this crypto is going to really rapidly educate a lot of people.
Absolutely. We've got a question here. Bill asks, I'd like to know how Sebastian feels about this long bear cycle we've been in.
Great. Yeah. So a couple of things. I don't know if your audience or you're familiar with like the S2F, the stock to flow stuff that people have talked about. Are you've heard
like Plan B's Bitcoin stock to flow model? Yeah. So I am. Half of my audience would be, and half of them may or may not be.
So okay. So well, I guess. One, I'm actually personally not a huge fan of it. So, but so in regards to the bear cycle, I think it's natural. I think that the way that these sort of social things work is that we work in these boom and bust cycles. So to me, how fast we rose last time, and it was a few year run up. Like, again, I started in 2013, so I've been through a few massive, when I first bought Bitcoin. There wasn't like a place like Coinbase to buy it from, right? I had to deposit. This is a funny story. I had to go to the bank and I had to deposit cash into somebody's bank account that they sent me an email with their bank account, right? And like literally the bank lady told me, "Are you sure you want to do this? Are you sure you want to give this bank account your money?" And I was like, "I think so. Like I think I trust they're going to give me some Bitcoin or whatever." But so I've been through a bunch of these cycles, and so it doesn't surprise me at all. Like everybody wants it to happen fast, right? But adoption, you know, it's. I think that it's going to be cyclical like this for a while. I honestly think that we're going to have another boom cycle with another like sort of bust cycle. But the idea is that we're going to take legs up each time. So we'll pull back big.
Higher highs and higher lows.
Exactly. So it doesn't surprise me. Like I said, so there's a few other like people. There's this guy I really like. He's called Dave the Wave. And Dave the Wave does technical analysis. He actually him and Plan B actually like do these arguments online on Twitter. But I like he does this. He talks a lot about extended cycles. That each time it takes a little longer to build up, and it will take a little longer for the bear market to go down. And so I lean in that direction. I think that in the next few years, let's say the next 2 to 2.5 years, I think we'll see like a mega cycle like we did last time on the upward side. I hope, but you know, those things are really, really tough to know. But that's what I would imagine. We had a few years down, and I think we're going to have a few years up.
It's really interesting that from a macro perspective, there are a lot of things that I honestly believe that are market principles that are in the crypto space's favor. One, you look at sentiment and analytic tools. Searches are up. You look at exchange accounts being created, they're up all over the world. This is not a US centric thing. This is a global thing. These are all indicators of participants coming into the network. If you understand anything, one of the things that I did get in school was understanding network effects. Network effects are huge for us here. Now, as far as the price of our assets going up or down, here's the thing. We've never, ever in the history of the world had economies this weighted to debt as a percentage of how things are measured and growth is measured. We've never had debt levels this large. We've never had a disparity between wages and growth. When I say growth, I'm talking about real estate prices going up. Wages aren't going up. Well, how is that? How does that happen? Asset prices going up. Wages aren't going up.
Yeah.
You know what I mean? So it's no longer an economy, an investment economy that's being driven necessarily by investors. It's being driven by debt. Yeah. For many years, it was being driven by the corporates buying their own shares back. Passive indexation. There's a lot of reasons that are substantiating why we have valuations of some of these asset classes that if you did understand value investing and how to actually value a company and look at its earnings and cash flows and debts and project forward earnings and use those multiples as a gauge, we're in upside down world. We're in Lalaville. This is insane using previous metrics, but we're not. So I guess what I'm trying to say is we've never been in a situation like we're in now. So nobody really, I don't care about your stock to flow stuff. I don't care about how much TA you do. Yeah. Truth of the matter is we're in uncharted territory.
Yeah, no, absolutely.
To predict what's going to happen, but you can look at some indicators.
Yeah. So again, this is this tools, right? What are the tools here? And so a lot of traditional guys, whether it's them trying to apply stock to flow or whether they're trying to do whatever, however they're trying to explain it, the main thing is almost everybody's saying the same thing, right? That it looks like that this is going to be the next wave, right? That this is the big thing. Whether you're in tech, whether you're in finance, whether you are in the political realm, right? Everybody's kind of saying the same thing. They're like, yeah, this is the wave that's going to change the things, you know?
You want to take it now? This is from a buddy of mine, Rob. Rob's got a great channel, by the way. If you are in the digital asset space and you want a fair kind of like no bullshit kind of YouTube channel to go check out, Digital Asset News is excellent because he doesn't champion any one digital asset. He's just showing you what's going on, and every once in a while it gets great guests. Anyway, here's his question. How high will the market cap go in the next bull run, and what will be one of the dark horse cryptos that will make massive gains?
Cool. Okay. So
now you won't get this on Real Vision Crypto. He's unbiased there, but on my channel, you can just be Sebastian and tell us what you see.
Yeah. So I mean, always got to be careful with making guesses and predictions because normally they hurt us because people are like, you said that wrong. But so I would say, you know, I believe that the .com bubble was able to get into the trillions. And so that was, you know, in the 90s basically. And the last peak we hit was 800 billion, I want to say. That was the last big bull in the end of 2017. So I would be really shocked if we didn't hit multiple trillions. So I anticipate, you know, I don't know on what timeline. And so I do expect up and down, whatever, right? But I do think the heights of the next big bull cycle will probably be greater than I wouldn't be surprised to see greater than 5 trillion. Yeah.
I'll give the audience. I don't believe for 1 second that we'll see those kind of numbers, 5 to 25 trillion in the next bull cycle. I do believe we will eclipse the previous high. There'll be correction because I see this as you've got the retail market is going to come in as prices go up, but their contribution. So you got to remember orders of magnitude here. It's one thing to have $1 billion affect a $300 billion market. It's a whole nother thing to have $1 billion affect a $900 billion market.
Yeah.
So the effects are not equal 1-to-1 all the way through the scale. The orders of magnitude come into play. So with that being said, as this market cap grows and new price levels are established, right? In other words, they go up, they get tested, they stabilize, new entrants will come in these different phases. And I think you'll see more of a nice rising tide. And at some point there will be an inflection, but it won't be the next bull run. It might be the one after or the one after that.
Yeah. So,
you know what I mean? That's what I'm saying.
Yeah. So related to what you're, and I appreciate what I would call what you just said. It would be a type of conservatism, right? And I think that I try to lean conservative, but I think that the mania that I've seen, the cycles of mania that I've seen. So like you were saying, oh, like, you know, is just retail coming in, or we need the slow entrance of the big boys, basically, is kind of what you're saying. And I don't know if retail can support that, sort of, is what you're getting.
That's exactly what I'm saying. So, retail will not support the next Cambrian, the next parabolic move.
So I would say that people are very greedy. And so because this is a retail first revolution, meaning that most of the institutions aren't in here, a lot of the retail do not understand when to let go. So because of that, and then also like the hodl, the hodl in the space, right? This idea that don't let go of your crypto because it's important, combined with global macro situation, combined with, you know, like every country in the world is printing as fast as they can. And more people are starting to say, where the hell is this money coming from? where is this money coming from that you're like, well, how do I get checks, right? Like I see this among people that I know, right? That they're like, wait a minute. They're starting to come on to the realization that money comes from somewhere, right? That this is diluting your value. This is hurting other people. And so the two things that people don't want to let go of their crypto, if they think they're going to get rich on it, retail is not as savvy as these institutional guys who are like, yeah, we made a 3X. Let's cut it. Let's cut our wins. Let's take it. Right. I see a lot of people, and I've made this mistake myself, and I see people do this, is that people don't know when to let go. They don't know when to take those gains. So if we are a retail first revolution, meaning that a lot of the people that are in now are retail people, they're not big institutions, they will hold longer than they should hold, it's like a supply side liquidity crisis is something that I hear people say. It's like that they're not going to give it up those coins to the market. So like I said, I've seen that. I saw it in 2013, massive explosion. We saw it again in a greater magnitude, 2017, 2018, massive explosion. I anticipate that because of the virility of the thing, and because people have experienced these cycles, that they're anticipating explosions again. So I'm curious to hear your thoughts on, you don't think it's going to be that big. So then you think if last time we hit 800 billion total market cap of all crypto, you think we're going to stay under 1, we're going to stay under 2, we're going to be twice as big, because I think we should be multiples bigger in the next cycle, which means that to me, I would be surprised to be under 2 trillion.
All right. Well, so you brought up a good point, and this dovetails right into Mike's statement. Isn't one of the biggest problems for adoption is that the status quo doesn't want to let go of the status quo? So, Mike, I'm going to answer that not directly, but indirectly. And that is, if you look at the numbers, right? So let's say there's a finite pool. This is not infinite. There's a finite pool of people who use their capital invested into something in hopes of a ROI. They want a return on investment. That pool, that addressable total market, is 554 million-ish, right? Now, sure, there could be some, an event can take place where new participants that weren't ever playing before come down to play. These are all true factors, but let's just kind of take it down to a small percentage of the global population uses capital for the purposes of investment. Now, of that, a very small segment of those participants have invested into crypto. So what we're hoping is that this larger addressable market of the overall investment community will take money and put it into crypto. Okay, well, where's that money going to come from? Do they liquidate other assets like real estate, gold, equities, and bonds to come into crypto? Well, let's take a look at it. Equity markets are at all-time highs. Who in their right mind would liquidate equity positions to come into an unproven, highly volatile, very little known, matter of fact, very difficult to operate in? The learning curve to come into crypto is high.
Yeah.
We're not talking about doing this from a Bloomberg terminal or your logging onto your Charles Schwab account. You know what I'm saying? So yeah. Where is that new money going to come from? Well, in the retail space, I think it'll be a very small piece of it. So what will be driving the new money coming in? It'll be asset allocation from family offices, hedge funds, endowments, pension plans, and they will not come in strong. Michael Saylor is rare. People are not going to allocate 75%, 80% of their corporate balance sheet to Bitcoin off the bat. Now, this is what I see happening. I see the 1, 2, or 3%ers. In other words, they're going to come in with small allocations. But then, as the tide rises, they may increase that allocation. As the tide rises, they'll increase that. Now, how much of that approach will create parabolic runs in coins? It's going to be built off of that coin's market cap and liquidity and all these things. Obviously, something like a what's a really great Ethereum project that has like Safe Haven. Safe Haven is a great project, right? Do you know what Safe Haven is by any chance?
No.
Okay.
Is it Haven? Is it Haven? Is it
Safe Haven? They're basically building wills through smart contracts on the blockchain. So you can allocate your assets and your keys into these smart contracts, and if you pass on, then you bypass probate by having these smart contracts handle the distribution to the beneficiaries that you've listed in your thing. Very small market cap. If that got a little attention, that thing is going to shoot up 5, 6, 7,000%. Same amount of money into Bitcoin.
Sure, but you've seen
nothing happened. So
sure,
that's what I mean.
So you've seen, so again, you keep talking about like demand side, right? You keep talking about demand side, who's going to come and buy. But my emphasis on why I think the explosion is going to happen is supply side, meaning that people are not going to let go. So your example, so I was going to say, you follow the DeFi stuff, right?
I do follow it. I have not invested $1 and I won't for a while.
Okay. Yeah. Well, I mean, it's very dangerous. That's why I always tell people, these are games. These are experiments. If you want to throw your money at an experiment, you got to realize that's an experiment. This is not like, it's not established. It doesn't have 10 years of security under its belt like Bitcoin does, right? Like these are very different things. And so like a couple of things I want to touch on. Well, one, in the DeFi space, we have things like, but in the DeFi space, there has been these coins that explode into literal billion-dollar projects, right? Like from 0 to $1 billion, literally weeks. That doesn't happen because of the things that you're talking about. That $1 billion valuation does not come from big demand side pulls. It's coming from the people that own those things that were valueless. They do not want to let them go. So the supply available to people to buy is so limited that basically they're just so scarce that people will buy those prices up. And it doesn't require that much demand side because people won't let go of their coins, because like whether they're greedy or whether they're very hopeful that it's going to be an amazing project. So like your example of the Safe Haven thing is that people, if they believe in it, like you're saying, oh, I like this project, well, you're not going to let it go unless you get the big bucks that you want. And so as long as you have enough people doing that, it doesn't take much demand side. It does not take much money.
This is true, Sebastian. You are absolutely correct. There are two things that I'm seeing as somebody who's in the retail space on an everyday basis, whether it be through countless wasted hours of participation on Twitter or the consumption of YouTubers like myself creating content. The average Joe crypto investor is getting smarter.
Yes.
And more and more, and as more and more people who, like yourself, who lived through November 2017, are adopting strategies to capitalize on the next, we call them exit strategies. I have countless hours. I have one of the playlists on my channel is called Beyond Moon. It's all about investment exit strategies. So defining exit points with percentages of the total allocation. So if I have a 150,000 XRP and XRP hits this number, well, then this percentage of that total number will get liquidated. I'm going to take some profits. Now, am I going to sell all of it? No, but I am going to give some supply back to the market. And I'm not the only one. That more and more and more, I'm hearing this is like a predominant theme.
Well, so if we are early adopters, which we are we not?
Right. We are.
So this is what I I say this to quite a few people also, is that these new people that are coming in, they have to learn those lessons too. And the number of new people is going to absolutely outweigh and overshadow us, the early adopters, right? So they have to learn the lessons you're talking about, the lessons that I've learned, the thing. They have to realize, like, oh, you can't just hold it forever, because if you've been through a cycle like I have, man, have I had my heart broken, where I'm like, oh my gosh, it's so high. Let
me ask
go
you
forever.
This is a perfect time. Personal question, Sebastian. Answer if you'd like. In the November-December Parabolic Run, you're a participant. Did you take some profits?
Very, very little.
Okay. Have you since revised your exit strategy?
Sure. Yes, absolutely. So this is the second time though. So this experience that we're talking about of 2017. I had this experience immediately when I first got into crypto. I didn't even learn from the first time. Okay. I didn't even learn from the first time, right? So, but the point that I was trying to make is that the amount of people that need to learn this lesson is growing dramatically. Absolutely, people are learning, right? Like the people that are here are getting more sophisticated all the time. But the new people won't be like that. Like, I hope to educate people, which I think that's what you're also trying to do, right? Is like, let people know, be smart about it. If you need that, take it, right? If you need it, take it. Don't be crazy with what's happening, Don't give in to the mania, basically. And
I'm curious. So, because I think this is an important thing. Not that I'm not trying to debate you, but I'm trying to challenge you a little bit. So here you are, you're a bright guy, you're in the space, you lived through 2015, 2017's happening. Did you have an experienced guy over your shoulder in your ear, Sebastian, take 20%. Take 20% off the top. Take 20% profit.
Yes.
You did?
So again, I've been in the space for a while. I have people, whether it be friends or family, or like I'm a part of a bunch of crypto groups. People are saying, so I'm kind of unique. I would say I'm unique in that I came to crypto for ideological reasons, right? I didn't come here to get rich. I'm not even that interested in financial planning stuff. I'm not. I'm here for the revolution. That's what I'm here for. Like, meaning that I believe that this is these are freedom-inducing technologies. I believe that deeply. That this enables types of freedom that we would never see if blockchain didn't exist. So I personally also have a death grip on my crypto, meaning that I am I'm going to hold forever. I want to hold forever, right? That won't change. But the fact that I should make smart financial decisions, which again, like, it sounds like you're trying to educate your community about these sort of how to be smart about what you're doing. I did have people telling me, hey, you're up a whole bunch. You should take a bunch of that out. And I'm like, nope. That's important to me. But now in retrospect, it's like, yeah, I should have shaved some for solid and safe financial planning, right? For being an intelligent investor. Right. But I hadn't really been here. Like, I've become this, right? I think I'm now more of a savvy investor. Whatever, over time, I've learned many painful lessons. So I become more of an investor type of person, I guess. But that I really didn't enter the space as an investor. I wasn't chasing money. When I got in, it was crypto had been down for years, and I came in because I thought it was special, not because I was trying to make a bunch of money.
Gotcha. I'll tell you, here's my story. I came to this space thinking that I was an investor because I had a Coil account, and I had picked some incredible cannabis stocks that shot up,
Yeah, 10X. You were feeling good. Yeah.
Oh my God. I'm taking trips to Costa Rica to get eye surgery and some dental work, and it wasn't, so the point being is that every single day I am a wiser, smarter, more polished investor because I spend a tremendous amount of time learning from the best investors. And I find them 99% of the time on Real Vision. Like, for instance, Real Vision, I've had the great opportunity of having Raul on my show twice. I have developed a friendship, personal relationship with Tony Greer, David Floyd, Brent Johnson. These are guys that I found through Real Vision and through Twitter and email, and then eventually getting them on my show and developing relationships. These are guys I can call now and say, hey, what do you think? And get advice from the very best in the world. That is incredible. And my journey continues every day. And so what I've done is I've dedicated my channel to bringing financial literacy, investing principles, and general learning to the space. Very rarely will you see me do a video where I pull up a couple of news articles and expound upon them. It's generally I'm interviewing people. I'm having shows like you and I are having right now, and we're trying to educate each other.
Yeah.
Because you know what? We are in a once in a lifetime opportunity. Like, I lived through .com, didn't have $1 in the market. I lived through the transition from landlines to mobile devices. Started off with radio, then it went to cellular, analog, and then digital. Didn't have $1 in it.
This is like what you were saying before about like the difference between, academic stuff and street smarts. And so you have learned through pain, right? Meaning that you're like, man, that's a missed opportunity. Man, and the fact that you've been able to reflect, identify, and now you're trying to share that with people is so valuable. You know what I mean? And that's like, again, like I consider myself really, really high on the crypto knowledge spectrum because I have been brutally hurt by some of these things, whether it be, I've sent money to the wrong address, right? I've made all of the worst. I've made all the worst mistakes, and that's how you learn, right? You have to feel the pain because there's no way you can tell somebody, double check the address, right? Double check or all this weird crypto stuff.
First three, last three.
Yeah. So like you can tell them, but it's easier to impart that if you've been hurt by it. If you're like, I literally don't ever want to do this again, and I don't want you to do it. I don't ever want you to lose that. So yeah, that's the value of becoming educated on your own, right? Is that you learn those lessons deeply.
Well, let's you know what? Here we are, Jerry Hall. I'm not a rich man. I live on a very, very modest income while my investments marinate and mature. But I want to make available to 20 members of this show, right? There's over 32 people in this little chatty thing right now. 20 of you, all you got to do is go to realvision.com, sign up for a $1 free trial, message me on the exchange. Find me, Jerry Victor Hall. Say, hey, Jerry, I made it to the exchange. I will send you $1 plus in XRP. So it's literally free for you to go check out realvision.com. Real Vision Crypto, which Sebastian is the editor of, and their community platform, The Exchange. It's like all the best that pertains to investment information and exchange without any of the BS about cat videos or politics, or if it's not about investing, it's not there. Yeah. And so it's a really great community platform. I want to encourage each and every one of you to go do it. And if you want your dollar reimbursed, message me on the exchange and we'll give me your XRP address and I'll shoot it over you. It'll be there in 3 seconds.
Yeah. Now, and so just
go ahead.
Well, I just wanted to basically echo what you were saying is that like, that's awesome that you're doing that for your people. And I really think that like, again, I'm new to the Real Vision stuff as well. Meaning only 6 or 7 months have I been paying attention, and there's a lot of valuable content. There's a lot of really smart people like yourself talking about what's important, talking about financial literacy, exactly like you're talking about. And it's not like Twitter where people are arguing about stupid stuff. It's long form discussion about this is important. We can make money this way. This is so. I mean, I really think it's awesome that you're doing that for your people, and I think that Real Vision and the exchange, the community there is growing really rapidly, and we want people there that are looking to learn, not to argue. Like, again, I think debate is great, but the whole point is to say, let's articulate why this can be a moneymaker. Let's articulate why this is dangerous, right? Like, and again, as my role, I try to be this like shepherd of the crypto community, and it's scary out there, right? You know how many coins there are. So one of the questions I saw earlier in the comments here, somebody was like, there's so many coins. Is this like hurting the adoption, right? And so, like, to answer that question, I would say I don't really think it's hurting the adoption, but people getting scammed might be hurting the adoption. So if you don't have tools like your website or your channel or like Real Vision in the exchange, if you don't have that, you're going in blind and you're going to lose a lot of money if you're throwing it at random stuff that you read about on some weird thing on Twitter, right? Like, you're going to probably lose money. But if you have people, like I always say this, like trust lines, right? People that you talk with, weekly meetings or whatever, study groups. But if you have people that you're like, Jerry says this might be okay, the Real Vision community says this might be okay, then you can begin to say, well, then maybe this is okay. You're getting all of these signals,
Okay, Sebastian, with the last question, then we're going to stay with the topic of learning, and we're going to bring our lady investor from the street, Bit Avenue, in. Sebastian, do you see your crypto portfolio of the last all-time high as a personal goal to deal with properly this time around?
So, like, am I going to adjust my methods? Yes, I would say, like smart financial planning. I do think that we work in bear and bull cycles, right? I think we have hype cycles. So I think, like, again, I am a true believer in the crypto stuff. So I won't ever get rid of all of my positions, but taking some gains is absolutely something that I plan on doing. And so I hope to go past my previous all-time highs.
Not a kid.
But yeah, I want to take some gains on the way up because I think it's smart financial planning, and I need to take care of myself no matter how much I love my bags. I want to be smart.
Well, let's bring in Bitta. The wonderful thing about this space is that it has been growing up, and you can generate an income without putting more money in. Proof of stake protocols where you can generate more of the underlying asset from your own computer. You can use a third-party trusted platform if you trust them, something like a Celsius or a Nexo or Cred Earn. You've got crypto Roth IRAs that you can trade inside of and utilize elements of this market going forward. We have tools now available that weren't there in 2017. They just weren't there. You know what I mean? So let's bring in Britta. She always has great questions, and she just brings a nice little flavor to the end of the show. Hey, Britta.
Hey guys, how are you guys doing?
Good. Fire your questions, young lady, because we always know you've got great ones.
Yes, nice to meet you, Sebastian. It reminded me of the mermaid,
Yeah.
So, anyway. The Little Mermaid. I'm sorry. The question that I had is, you said you studied economy.
Yeah.
So how and what from your formal study has helped you in the crypto market as far as like principles are concerned?
Yeah, so I guess the interrelationship of things, right? So I mean, I learned a lot of the basics in college. I learned theory about the interplay between different areas of the economy. And so I think that this has helped. I mean, I'm not sure if this is your question, if it's related to the crypto stuff, but the interplay the dynamics of interplay between different things. So to give you an example, Bitcoin and the price movements of Bitcoin and its economy, the economy that's built around the Bitcoin stuff, it has a major impact on these smaller tokens, right? Like, so these relationships are really important in economics stuff, right? I took econometrics where we're kind of like discussing how important the relationships are. This thing has a strong impact on this thing. This thing has a very small impact on this. So yeah, I would say that the interrelationships between things are extremely important. And so something that I see a lot in crypto also is that you see a lot of these metrics as to say like, how correlated are these assets, right? And so one of the maybe plays that I've done is if something is smaller than Bitcoin, but it's highly correlated to Bitcoin, often some of these smaller things will outperform Bitcoin, right? So that's sort of like a part of how I've played. That's sort of kind of how I've played I'm a big fan of Ethereum. I'm wearing like an Ethereum shirt right here, but it's smaller. And as Jerry had said, it doesn't take as much money to move it, right? To move it upward. So I feel pretty confident in Ethereum as a project, and I think it has a good looking future. And if I see Bitcoin, doing well, I think that it's pretty highly correlated with Bitcoin. And but I do think since it's smaller, it will probably outperform. Like a lot of people say this about like gold to silver types of things as well.
Oh, okay. And from from the financial literacy point of view, what are the main principles that you see that you use the most in the general crypto market? So
it's tough. So what I would say is that, so financial planning is important, meaning like if something looks really good, like meaning if you have a lot of gains, you should probably take advantage of that and make your exit or whatever, right? So those are lessons learned from the past. But portfolio management, meaning like it's hard to do because the crypto world is so correlated. It's hard to let's say if you wanted to make a crypto portfolio, it's hard to like differentiate. It's hard to say, oh, I'm going to buy this coin and I'm going to buy this coin and expect them to act differently because most of the things are correlated. So it's very difficult to use those financial things if you're talking only about crypto specifically. If you're talking about, I have some cash, I have some equities, I started investing in, let's say, precious metals, like that's a full portfolio. If you're just investing in crypto, it's very hard to use that financial knowledge because crypto is its own beast. Crypto, if you're investing in mainly into all these crypto assets, it's more like a venture capitalist investing, which means it's highly risky. These are very risky things. So it's hard to pull traditional financial literacy stuff into this world because it is very risky investing. But if you're talking about the overall portfolio, meaning like if you have cash and then you have, precious metals or something like that, that's kind of a different thing. So portfolio management's important. Understanding your risk. If you're in too deep, you shouldn't be in too deep, right? If the amount of money you're making is making you nervous and you can't sleep at night, then you shouldn't have that much money in the markets.
Okay.
Good point. I'll tell you from now keep in mind, these are completely different decades that Sebastian went to college and I went to college. So my college days were in the 80s for the most part. And some of the things that came from, I remember my economics class, supply and demand metrics, mean reversion modeling, modeling period, being able to model, right?
Yeah.
Model expansion, contraction, understanding supply chain, understanding risk vectors, things that can be attacked or hurt or damage something, whether it be a manufacturing line or a supply chain or for that matter, a currency chain, whether it be if you're doing one thing for another. Those are kind of universal principles that apply very well here because we're talking about assets.
That's a great example. And so I want to just reinforce this idea about supply, right? Is that so a lot of people who are investing in, they're going down the line, right? They're trying to invest in these other new projects that they heard there are exciting crypto projects. We need to know, like, one of the most important things is what is that supply and how hard is that supply, right? That's a really big concern, is that let's say somebody wants to invest in some coin and they invest in it with the expectation of the supply being a low supply. And then they find out that the team can very easily change that supply. That devalues your assets very quickly. So being aware of the supply schedule, meaning like how often do they release new tokens? Is there more that will be released? This is maybe a way to avoid some really big pitfalls, because some of these projects are highly inflationary. And that's like what people are trying to avoid from the fiat currency. So that is a great example, Jerry, of supply, demand, or just being aware of, can that supply go crazy and your investment become valueless? Right.
In one of the incredible, so my last interview with Raul, is jam-packed as it was. If you had to boil the whole conversation down, it came down to this. This is a once in a lifetime investment opportunity to get in front of the institutions. Never before. Okay, so let's take a look back. Big, huge technological innovations. The car from horses. The little guy did not get in first. It was the JP Morgans. It was the Rockefellers. It was the Carnegies. These are the people that brought the money and propped those things up. How about, let's take a look at the next big wave. How about when we went from iron to steel in construction and we're able to build? It wasn't the little guys. They weren't tokenizing buildings and people were, millions of people were fractionalizing investment to get those things built. It was a small group of people. They put the big chunks of money in and they built it. Now we get into our time frame, personal computing. It wasn't us little guys. PCs were funded by big money shops. All right, let's talk about the internet. Let's talk about cell phones. All of these major technological innovations were always large pools in first. They were the early adopters. They reaped the largest returns. This is the first time that paradigm is switched, and it's us in first.
Yep. And
that's hard to comprehend because it's never been done before. How do you build a model off of that? We've got no data. Yeah. So it's really difficult. Therefore, I always kind of come back to, don't listen to a YouTuber. TA should be for entertainment purposes only. And if you really want to take value from your experience, learn everything you can about how the world works so that you can measure these new products, quote unquote, use cases to how are they going to disrupt this existing thing.
Right.
Allocate appropriately. If you want to take a lot of risk, that's fine. Know that you're taking a lot of risk. Yeah. If you don't, then that's fine too. Be able to sleep at night and enjoy the ride, because history books will be written about this era. It's really that revolutionary, not just from a technological standpoint, but the network participants. And I'm talking about you and me, the developers, the Rauls. I mean, it's truly a remarkable time.
I have a question.
Fire away, girl.
So if I keep hearing, the blockchain is going to revolutionize everything, it's going to change everything. And then on the other side, we say, okay, only allocate very small portion of your portfolio. If you think it's going to be around for a long time and going to change everything, What's the reason that we should be, or like that people advise? I understand the risk, but why wouldn't you go all in?
So from my perspective is because good luck picking the winner. So I would say Bitcoin specifically has a great dominant position. I actually wrote an article that I'm sort of known for in the Ethereum community. It's called The Flippening. And I wrote about how I believe that Ethereum will surpass the value of Bitcoin, right? So maybe this is an underdog take and a lot of people don't necessarily believe that. But so this is why you should be cautious, is because I don't know for sure. Well, especially if you start like investigating other projects outside of the top projects, right? If you're going deeper into the rabbit hole, good luck picking the winner, right? Like a lot of people thought that there's rapid change here, and that due to the open source nature of what cryptocurrencies are, there will be lots of copycats. There will be lots of innovation. This is the battle for the world's money. It will be the most aggressive, most intelligent groups of people ever trying to outdo each other. So because of the extreme intensity of the competition, it's not easy to say, I know who's going to win. So I think that in general, investing into blockchain is a great idea, but to decide on which one you think is going to be the winner, that's very, very difficult. So that's why you need to be cautious, and especially if you're going outside of the Bitcoin Ethereum space, it gets very, very risky because there is so much competition among those other projects. So.
And I've got a slightly different spin on that, not to devalue anything Sebastian said, because I believe that's very valuable what he said. I can tell you with 100% certainty that this asset class will swallow up all others. Digital forms of value will swallow the entire financial system. Okay, so what will be the winners, what won't? I don't really know. And I don't know when. And that's the biggest thing, is time horizon. So, for instance, Sebastian, I'm sure you and I have completely different portfolios. My bet in the quote unquote programmable money, proof of stake, smart contract world, my money's on Cardano for a lot of reasons. Maybe debatable, doesn't matter. I believe payments are going to be at the source of everything. So I believe there's a place in a market for XRP, because it moves value from one thing to another so quick, so seamlessly, and it doesn't need to have the security of Bitcoin to do that in 3 seconds. And it's pretty secure. It's never had a problem, and it has a long track record. They've been around since 2012. Okay, great. I got a VeChain allocation, and I got, of course, my Bitcoin. Now, everybody's portfolio is going to be different because they see different things and they have different allocations. But here's the thing. I went all in, Bitta. And I went all in having zero debt. I went in after becoming debt-free, after having no financial obligations other than food and water and shelter. And I was able to find a place in the world where I could do that on a very, very limited budget while I allowed being all in to mature. Not everybody can do that. So you have to live within your means. So part of becoming a good investor is understanding fiscal responsibility, right? Like you and I, we've talked and stuff. The investor mindset is, well, I want to have something in the future, so I'm not going to spend $5 at Starbucks today. I'll buy a $5 bag of coffee that'll last me 2 weeks. That's the investor mindset. Investor mindset isn't, I only have $500. I'm going to put it all in crypto and hope it explodes without having the ability to pay my rent next month, or my PG&E bill, or my phone bill, or whatever. Fiscal responsibility has to be at the absolute foundation. And then every dollar you spend, are you being fiscally responsible, or not. If you're not, it's better to invest that money. But you need to be fiscally responsible first, and then you can allocate. You can be irresponsibly long.
Yeah,
which I am. I'm part of the irresponsibly long club, and I'm proud of it.
I think that
I'm willing to live like a pauper. You know what I mean? I'm willing to live off of beans and rice and top ramen right now for as long as it takes, because I want to end my life with filet mignon and lobster and first class on the airline when I go from here to there. You know what I mean? That's how I want to end my life.
I think the timeline, I think that the most important thing that I took out of what you just said, which I feel like I should have said also, is the timeline thing is so important. It's so important. So I have the longest time horizon, which I'm sure Jerry also has this. So, but a lot of people come into the space because they hear you can make a lot of money and they're hoping I'm gonna triple my money in the next 2 months. That's what people hope, right? And then their money goes in half for the next 2 years, and then they have to pull their money out at a massive loss. So that's why you should never invest more than you're willing to lose, and you should know your time horizon, because if you have a very short time horizon, I don't know if that you should be going all in with a very short time horizon at all. So I think understanding your own time horizon is very important, and I think generally speaking, long-term time horizons are the most important to let these things kind of play out. And so if you don't have a long-term time horizon, maybe you shouldn't be investing, right? That's like the whole thing, is you need to have some time horizon to be doing these things, because if you're like, oh, I need this money in 1 week, but I'm going to throw it into some coin and hope it explodes, that's very dangerous. But if you've built up, like Jerry was saying, you know, if you don't have the debt, if you are financially responsible and you have a long time horizon, meaning you don't need that money to pay rent next week, well, then you can start being more creative with your money.
Yeah, I mean, if you're in a place in your life where you're willing to make trade-offs, right? Okay, I've invested all my money in crypto. There's nothing wrong with that. If you're willing to sleep under a bridge. Are you willing to eat out of the soup kitchen? And if those are compromises you're willing to make, right on. If you have bills to pay and children to feed, and you're taking money and investing it into cryptocurrency, thinking that if it hits, you can pay off your student loan, then you're not investing anymore. You're gambling. And that is the distinction. Gambling versus investing. Fiscal responsibility versus hoping and praying. You know what I mean? Any more questions, Bitta?
I do. I have a last question. From your economics background, what are the few principles? I would still say principles that you would say for a new investor to go be. These are the things you should know before you start investing in anything, really. Like, what are those like core principle of these are the things that you should know?
Well, so economics is a bit different than finance. So I actually don't have massive. My college education wasn't based around investments, right? My economics background is based on basically more broad monetary policy, stuff like this. So, but if we're talking about what would I say is really important to understand before you begin to start investing into digital assets, I would say understand your own risk. Like some of the things that we've already talked about, right? Like what's your time horizon? Understand your own risk. Like if you have a high risk tolerance, you have a low risk tolerance. You can afford to lose all of your money. You can't afford to lose all of your money. Get a basic framework for in the exchange, in the Real Vision exchange. I try to post tools all the time, like analytics websites, so you can see, are these things being used, right? Or is this just people doing really good marketing, right? So the further you go into the crypto stuff, maybe the more complicated it gets. So if you're trying to invest in low risky things, that's a kind of a completely different story. But so I would say mainly is you need to understand your own situation, right? Is that you need to understand how risk averse are you? If you can handle a lot of risk, great, because it is risky. Like I had said to you before about the competition in this space is fierce. So if you're going to try to invest in the next smart contract platform, well, there is a group of people all competing to win that thing. So understand your own risk, understand the competition of what you are investing into. So to give like an example that the Bitcoiners would like, there does not seem to be much competition for the money thing in the digital, in the crypto space. Like I think that Bitcoin has a massive lead in the crypto money, crypto store of value, digital gold thing. So when you start looking, look at the competition, right? Look at the competition so you're aware of what else is going on in there. So I think that mainly those are, off the top of my head, those are two important things. You need to understand your own risk tolerance, understand your own situation. And then once you start getting into those things, you need to understand, is somebody else already doing this? Is somebody else already doing this better? What is the unique thing? Like Jerry says, he likes Cardano. He probably knows about what makes it unique and why he thinks that, right? So if you're going to put money somewhere, you need to be able to articulate, this is why it's special. And also something that I do think is extremely important. I'm a big Ethereum fan. I can tell you better than most people why Ethereum is risky. Right? So you should know this about your own investments. You need to understand the risks and the concerns about the thing you like better than anyone. Because if you can't explain why it's risky, then maybe you don't understand your project, the thing you're investing in enough.
Okay.
Well said, Sebastian.
All right.
I think that one might make a 45-second clip that hits Twitter.
Well, I hope that was useful, or I hope that was kind of what you were hoping to get.
That was worth the price of admission.
That was great. Yeah.
All right.
Thank you.
So I'm looking at the clock. I want to thank my guests. I'm going to put both of you in the green room. Sebastian, this is your first time on the show. We do an after show where we just converse. Okay. You're more than welcome. So if that's something you want to participate in, don't just look.
Cool. Perfect.
I'm going to say goodbye on screen to Bitta and Sebastian, and I'm going to bring in producer extraordinaire Brady for his final thoughts of the night. Hey, Brady, what'd you think of the show tonight, man?
Incredible. No, really. It's basically come to a culmination of exactly the homework that I should be doing and the things I need to be following up on and making sure I'm understanding and this, that, and the other is portfolio management. And I think that's something that we're all going to have to do very soon once, we look at our portfolios again and we're like, oh, so now that we're at the same all-time high as it was last time when my mind was totally blown, now I have a lot more information and I understand what I'm going through, or at least better than I did when I first did it. So I think figuring out how to structure your portfolio and then balance it is going to kind of be, it's what every bull should do so they can withstand the bear market. Because if you keep taking 10% or 20% off of your coins that do a 1x, 2x, or 3x, you'll then have cash sitting there so that when whatever is undervalued, you can pick more up of it or pick up more of it. So it's, I think that's very important in understanding that and educating people that, hey, this isn't stocks, this isn't bonds, this is like economy meets money meets who knows what the future is going to bring. So it's very important that people like Sebastian and Bitta have conversations in public so that we can learn as much as possible, because when look at your Blockfolio app and it's starting to read 1.3M, 1.5M, you're hopefully not going to be losing your mind. Hopefully it'll be already pointing in the direction that you started a year ago when it was only at 200,000. So it's good to think forward presently, I guess, is my final thought.
Well, thank you, Brady. You know, folks, I'm not a paid endorser for Real Vision, but I will tell you that my investment knowledge has gained exponentially just following their content, just listening to some of the brightest minds in finance from around the world discuss their process in long form. Those of you that follow my channel know that I've tried to replicate part of that in a more kind of street level investor kind of way by bringing those same people to my channel, and as well as sharing all the stuff we share. Remember, we're all learning together. Some of us are going to make mistakes more than others. Let's be kind to each other. Let's remember that being supportive and putting the flags down. No more tribalism. Let's be a community that raises each other up. I want to thank you for tuning into the show tonight. If you've liked the content, hit the like button, hit a subscribe button, and please, if you're watching this on the replay, leave a comment. What did you like about the show? What did you not like about the show? Did you have a question that didn't get answered in the stream, or you weren't able to participate in the chat? We're here to move forward together. So folks, thanks for tuning in. And until next time, Pura Vida.